Get that microphone here. How you doing, friends? Ernie here, and this is the final hour of expiration on the 0 Days to Expiration YouTube channel. And we're here to do our second round of 50 attempts at trading the final hour. We did 50 prior to this, and now we're on number 7 of 50 of the next 50. So I committed to doing a whole 100 of these trades. And so, excuse me, I need to wet my whistle. And so what I wanted to do before we get started is go over a little bit about what the trade is and what our performance is and how I'm tracking it and how you can follow along. So what we do is we trade the options in the S&P on the very final hour of expiration. Now, the S&P expires 5 times a week, an option that expires 5 times a week. Monday through Friday, every day. And it's kind of unique. They used to do it only 3 days a week. And that is even set apart from most stocks or a lot of stocks that do weekly, and then others that just do monthly expirations. This is every day. So it presents an incredible opportunity to put on some premium collection strategies right at that final hour. And believe it or not, there's lots of premium left in that final hour. And so that's part of our edge, so to speak. There are other edges also in terms of premium collection and implied volatility versus historical volatility, et cetera. There are edges that we have that we take advantage of. The other thing that we do is we perform a kind of technical analysis using volume profile only. We do not use any kind of indicators, no RSI, no trend lines, no moving averages, no MACD, no stochastics, none of that stuff. The only thing we use is volume profile. Now, this is an extension of our normal trade that we take usually during the day, and we give ourselves the whole day for that trade. And in fact, there is a trade that's on right now. Now, I got out of the trade with a okay profit, about 100% return on my risk. And there are other people that are still in the trade. I get out because, I don't know, I felt like the trade was going south, and then it didn't. And as soon as I got out, it turned around. And hey, that's the way it goes. Other people, and I was in this particular trade, I was trading in a small account, so I wanted to ensure that I got the kind of return that I wanted or didn't lose anything. So I guess that's kind of a whiny excuse for just running scared on that particular trade when there's no reason I should have. Because if I had stayed in, instead of making, say, 80 or $100, I could have made, $400 or $500. So anyways, those are things that you fix over time. And the only way you're going to fix them over time is by logging them and then evaluating your performance over that period of time. So that's what I wanted to show you right now. So the first thing I wanted to show, first of all, let's take a look at today's trade. We'll go to the charts. These are the spreadsheets. All right. So let's back up a little bit so you can see what we chose. And if you've been following along at all, you'll recognize these arrows, meaning that those were the scenarios that I picked at the beginning of the day on where I thought the price or the market would go. And then we use those scenarios to build our trades. So we chose the one going down here into the T0, which is a value node. And the trade that I took was centered on 39.15, which means that it would have been centered right now. I got out up here when it looked like it was going to totally reverse. It happens. But we have members that are still in, and they're doing well. So let me show you what that trade looked like, which is really depressing. But I'll show it to you anyways. You gotta live with it. So here's the trade. There was about $100 risk, a little over $100 risk. potential profit of about 800 and a little over $800. And look, it would have been centered right here. Had I get out right now, see, I get out and I made about $100. Had I waited until now, would have been well over $300. And it looks like it's going to end up right here, which is crazy. I don't know if it's going to end up right there. That'd be a shame if it ends up right there. Then we won't have a final hour trade. But in any event, that was the trade. And other members took variations of that same trade uh, based on the scenario analysis, and trying to figure out where to put. Some people took something that might have been centered a little lower, some up where I had, etc. So, yep, there you go. That was, and let me just show you. If we zoom in a little bit here, I'm gonna see. This is the part where I'm gonna make an excuse, right? And so we came down. We took the trade way up here, and it came down into our spot, and I'm all happy, and it's right here. It's like almost centered, and then it starts retracing, and it came back, and I was good. And then it came up here, and it looked like, oh, this is going to be another one of those days where we have this huge move down, and then a complete retracement. And I get out up here, right up there, and then it dipped, and then it came back up there. So I'm thinking, had I not got out there, I probably would have got out there. And then it came down, and let's say I didn't get out there. It came way down, and then it came way up and got out there again. I probably would have got out there. Because it would have looked, oh my God, this thing's going up. But anyways, yeah, I got out early, and that's the way it goes. But that's okay. There's 5 days a week for these opportunities, and that's a lot of opportunities. So let me go to the performance so that you can see what we're doing here, and everything is logged. If I were to go to the website, for instance, let's see. All right, I just need to refresh this page here. Come on. I don't know why it's taking so long. Maybe I have to bring it into another browser or something. I don't know. Yeah, let's do that. Let's bring this browser over. There we go. All right, so this is what the trade log page looks like. And I started keeping logs 35 days ago. I've kept logs before, but I never did them publicly. So I figured, okay, now I'll do it publicly and I'll show every single trade. And I update this on a daily basis. There have been 35 calendar days, 36 total trades, 16 winners, only about a 45% win rate. You might think, wow, that's really low, Ernie. Yeah, it might be really low, but we're up, almost $2,200 in that 1 month with a starting capital of 23,000. So in 1 month, we've done almost 10%. So it's, there's that, right? And that's the kind of hallmark of this particular strategy. It is a very low probability, high potential return strategy. And so the good part about that is that your risk is always super, super small, very, very small. And so that's really that. This is the equity curve over that period of time. Over the past couple of weeks, 2, 3 weeks, been going sideways. And this is the drawdowns. You can see that we're in the middle of a drawdown, a little bit under. Let's see, it's about 1.75% right now. Not a big deal. And over the long term, I think that we can keep drawdowns under 5 or 6% max at any one time. And that is a remarkable figure, I think, for any kind of trading strategy. Uh, the hallmark of this is really the risk to reward that we take. And you can see that if you were to average all this out, you'd find that the median risk to reward is about 9 or 9, almost 10. So, in other words, most of the trades, on average, we take 1 part risk to 9 to 10 parts reward or potential reward. And that's really the key here, to have all of that upside potential, but very little downside risk. Now, the win rate is only 44%, but if you're making good returns, then who cares what the win rate is? The hard part, I think, for most traders is, and also there's the trade log, so you can go through all the individual trades if you want and just check those out, see exactly what we're doing. All right. So there's that performance. Then there's also the performance of the excuse me, of the final hour trade. So I'm tracking that. This is the second half of that 50. Remember, I said we're in 5 trades into this second round of 50 trades, and so far we're 2 wins, 3 losses. Here's that log and the result. Let's see if I can get that up there. That's the return distribution. And there's our equity curve. Not much of an equity curve with only 5 trades. But it is also right now 40% win rate. You know, that so early on, that's going to fluctuate a lot until it finally settles in probably somewhere between 40 and 55%. But you can see here's our largest loser, largest winner, etc. The profit factor, 2.22, not bad. But again, not enough trades yet to really make a difference. So I'll be updating this every day, so you'll be able to check that out. All right. All right. So let's go to the charts and see what we have. It really does look like we're going to center right at, very close to where we had anticipated it would go. I had said that, somewhere in the middle to lower end of T0. I think there's still a chance that it will get to the middle part of T0. T0, by the way, is a very large volume node. And if we were to zoom out, way out, we can get a better picture of what T0 looks like. So this is going to be T0. This is only showing the data from this cluster of price action from May until the present day. But if we were to bring in from last year, you would see that T0 is actually quite a bit more. And now this is T0 now. See how big it is? It extends way out here. In fact, it is the largest amount of volume at this level of any other period of or any other level over the past 2 years. And that's where we're at right now. So the center of that is at right about 3905. That's what it looks like if I were just hovering right here. That looks about 3905, 3910, something like that. Right there. All right. So now you see where the actual center. Now let's see what the center is just for this cluster here. That's including this price action that happened last year between February and April. So if we were to take that away, then you can see that this price action is a little less defined, but it's still there. So the best thing that we have to go by is that, that center. So it appears as if we're right in that center, but it's very ill-defined, but it's there. So let's zoom in on it a little bit. So here's T0. I'll make this a different color so it stands out. Let's make it, I don't know, bright yellow. So now you can see exactly where it is. And there are scenario lines. Let's zoom in a little bit more. All right. And it doesn't look like much from here, right? Because as we zoom in, we're not capturing, the volume profile is only capturing what is visible in the window. So we're only seeing the volume profile for what we see back, about a week. So, but that volume node still exists. And a lot of people don't play volume profile like this. However, we do, because these lines are still, and these nodes and the LVNs, the low value nodes, are all still relevant. And I mean, extremely so. If you were to follow all this, it's just, it's incredible how price action and the volume levels from a year, 2 years ago still have relevance today. So, anyways, and we have a little formula that we use, or a way that we can distinguish between older, bigger, or newer, smaller volume nodes. And so, if we were to look at what we have here just in the past few days, it looks, let's bring in some here, and we can probably use some of this volume here to make some determination too. We can see that there is definitely a node right here that coincides with the longer term node. And its high point is right here at 3904, which is a good, 17 points away from where the current price is. So the question is, will it come down? Excuse me. So the question is, will it come down to that point? I don't know. Will it? Maybe this LVN here, this low volume node right here, has some significance. 3922. It's coming up and it's butting up against there. You can see prices come down to there, and prices come up to that point. That point seems to have some level of significance, at least over the past several weeks. So let's zoom in a little bit more. Maybe a little bit more. Let's go to 15 minutes. So that level, we can copy and paste this guy here down at that level, which was at 3922, seems to have some significance as well. And you can see it. These levels aren't exact. There's, what we can say about them is that there's obviously orders above and below these various lines. That's basically what we're trying to show, that there are market orders and there's influence above and below all of these lines. And that's obvious based on the way price behaves around those areas. So let's zoom in a little bit more, see if we can see how price is acting right now. And so look, I drew this line here, and it has sort of respected that. It's like it zoomed through it, came up, tested it, now it's come down. So the question is, will it come down to the high value node, or the point of control of this T0? And is that where it's going to end up? That's where I'm betting that it will go. So I think that if we have a thin or a narrow fly right around that area between 3905 and 3910, that would give us a good chance at profiting in this final hour. So let's see if we can create something like that. Now let's turn this guy off. Let's get rid of all of these. And we'll make one at 3910. See, there's a lot of volume here at 3,900, which is to be expected. But if I do it at 3910, I'm going to have a 62% probability of touch. So let's see if that's possible, if we can make a very narrow fly, like a 5 wide. Now this is the ES. Maybe I should go to the SPX. Give us a little bit more juice. And the SPX, it'll be a little bit lower because the SPX is about 2 or 3 points off. So 3905. Let's see what that gives us. All right. It's not bad. I mean, right here, we can take a trade for 65 cents with a $500. It's about a 1 to 10, almost a 1 to 10, 1 to 9. Let's do the calculation on that to get the exact risk to reward. All right. So it's 500 wide minus, well, right now it's 55. Let's call it 60 cents divided by 60. And that's a 1 to 7.3. 50 cents would be a little bit better. 45 would be better. I don't know if we got, say, 50 cents for 5 wide, that's about a 1 to 9. Let's see if we can do that. What would it be if I went 10 wide? Now 10 wide would give us way more juice. It'd be more expensive though. And we're not going to get the kind of risk to reward we want. It's not even close. We're shooting for, 1 to 7 and up. And that's just not going to do it. So not going to do that. So let's see if we can get filled at 50 cents. Oh, it's really moving. Let's try 55. So maybe with a little price movement, we might be able to get there. I don't know. Oh, look at that. It might fill. It might fill. So this is my trade earlier that I closed. Yeah, I don't know if it's going to fill. So at 55 cents, is a 1 to 8 risk to reward. Now I'm willing to go there, but at 60 cents, it's 1 to 7. If we get just a little bit of a movement up, there's plenty of time here. But if it just keeps on moving down, it's going to invalidate the trade. And that, I'm okay with that. See, as we were talking about all this, it moved down. We probably would have got filled up here. It's the way it always happens. All right, let's see who we have online in the chat. In the I call it the peanut gallery. Here we have Mike. How you doing, Mike? And then we've got Will Do. Nice to see you, Will. And Clayton. Craig, how you doing? Ray. Uh-oh. Question. How much capital in total was risked in a month? In total. The well, let's see. I guess I could figure that out. I can give you how much capital was risked for the amount of return that we got. And I guess the easiest way to do that would be just to sum up the cost basis, right? And then, well, no, there's no easy way to do that because we have some ES and some SPX. I would have to create a lookup. But let's do it as if we just did just SPX because they're most, well, it's about half and half. Or we could go somewhere in between. So total $5,500 to make, if you were to add it up, but I don't know that's the proper way to do it. Yeah, so about 5,500, something less than 5,500 actually, because a lot of these are ESs. So half of them are ESs. So I'd have to say probably around 4,000 to make, but a lot of that's used over and over and over again. So we were never risking 4,000. I suppose if you lost every trade, you could say that, yeah, I was risking 4,000. But that's what I would say, about $4,000. That's what it appears to be. Because the E-mini risk is going to be half that of the SPX. So hopefully that answers your question. But each trade is never more than somewhere between $50 and $200. And then usually going for a max potential of 9 to 10, 9 to 12 times that. All right. Oh, did we get filled? I think we got filled. Did we get filled? Yes, we got filled. There it is. Way down here. Yeah, we can move that up to one of the groups like this one up here. So it's nice and separated. There we go. Uh-oh, we're down $12. What are we going to do? All right, so we're in the trade. See if we can mark off the spread. All right. Need to find out where the break evens are on that spread. And 3,900 and 3,909. All right, so there's our spread right there. It will expire right there. So we don't have much to go with, and it's going the other way. All right, let's zoom in on this a little bit. It's really funny. I started to put the trade on up here. It dropped immediately. So I probably chose a little bit heftier price than I should have. Maybe you should have gone for 50 cents. And then when it filled, we had a push up. All right, let's continue on. How you doing, Hassan? Good to see you. Um, is saying that most positions I've seen are right around $100 or so for the butterfly. Yep, that's about average. Yeah, I know. The problem is I can't run the stream and do a trade and do everything else and then support everybody at the same time. Yeah, I mean, well, when we say is conviction high, there was about a 50% probability of touching the center strikes. So that's a pretty good probability. So that means it's probably more like 70 or 80% to touch the at least the profitable area. But kind of blew that away if it just goes straight up. How you doing, Greg? And you're welcome, Vadim. And JB says the 3905 5Y just filled at 50. Thank you. But the price is going the wrong way. That doesn't matter. We've seen this rodeo play out before. Let's go to a 1 minute chart. With the 1 minute chart, it'll make it appear as if we have a lot more time. We have a much bigger area now to intersect. Now, I'm sure that most of you that are watching are very interested in high probability trades and making a little bit of money every time that you put some money down. And with those high probability trades, you're always taking much larger risk. So, for instance, most people doing the zero DTE strategy, what they're using are iron butterflies and they're putting them on at the money. And so they might be going for, let's say, I don't know, let's say that they're going for $500, but they'll put on very wide spreads. So their actual profit they're going for is only maybe 25 bucks. And then they'll take 50% of that, which barely gets over the actual commission that you would pay. So, and if price like really moves away from them, they could end up with a huge loss. Now, when we put this on, the max that we'll ever lose is the risk that we take. In this case, $55. But potentially we could be making $450. But not if it goes up like this. So a little exercise that we were doing today, we were, as I had showed you the performance of the strategy. The interesting thing here, when you're doing under 50%, you got a lot of losers, but you tend to have a lot of bigger winners. And so you get a little bit of volatility in price in the equity curve, although not too much. And here is one of those periods where we're just going sideways. I would expect this to, it might go down a little bit, but it'll probably turn up and we'll have some more pin trades and we'll go higher and higher. And I've simulated this out by taking the same kind of risk to reward that we take and the max losers and max winners that we've made just in the past month or so, and then plug them into this simulator which simulates these types of trades in three different size of accounts, right? So we'll look at the trader 2, the $20,000 account, and I would say that on average we're probably doing 2 trades on average. It's probably more likely. All right, so we'll go to trader 2 and we can see what a what an account like this will do. Now, this will simulate going between 1 and 2 trades, and it will always try to keep about a 44% on average. This is through a normal distribution, so it could be a little higher, it could be a little lower, but on average, it will come out to that. On this particular run, it came out to 50%. I'm sorry, 40% profitable over 500 trades. And over 500 trades, how did it do? It more than doubled the money. So that would simulate about about a year and a half to 2 years of trading. All right, that's one instance, and we can run this over and over again just to see how it works out. All right, so that, almost consistently. Now this year, this time came up to 56,000, so um, more than way more than double. So the interesting thing about this is that you get periods like this, for instance, where you just go sideways, right? That's a lot of trades, by the way. Let's say that you start here at this trade. What trade was that? That was say trade number 46 all the way to trade number 111. So 70 trades, and you hardly made any leeway. That's like 2 months worth of trades, and that can certainly happen in any strategy. And I think with a strategy where you're only making 45%, that could be a little frustrating. You could have some good trades in there, but then you can see right here, they had this little dip down here. So if you were just starting out, let's say you were starting out at the 76th trade, and then and then you had a drawdown of maybe I don't know what would that drawdown be. There the price is at 31.4, and here at the top it was at 32. So you had a drawdown of $1,400 over, say, I don't know, 70 trades. That could be discerning, disconcerting, right? But that's not the big picture. The big picture is this longer term. And in the longer term, over time, you start making some headway. But everybody's experience is going to be a little bit different. And your experience, obviously, is going to, and you can see here's the drawdowns as a percent of the total capital at that time. And you can see they're not big drawdowns, by the way. They look nastier than they are. But if you look at the percentages, between 3 and 5%, those are minuscule drawdowns. And while you have drawdowns on a regular basis, the account is still going up, right? And then there's a period here where it just went sideways for, wow, a few months. People trading think that everything's just going to go up all the time, and it just doesn't do that. But here you can see, and this run was only a 40% profitable. With a max drawdown of 5. So every time I press calculate now, it creates a new situation. But you'll see that no matter how many times I press it, based on the criteria, you very rarely do you get and start off with such a large drawdown or a big enough drawdown that it ever stops you out. And I have the stop off or the cutoff at 10,000. But even if I put it at 15,000, that would never happen because it never draws down that much. Now, in this particular case, because we had a big drawdown right at the beginning, we had a max drawdown of 13%. And you can see that represented right here. All right. If you had that same drawdown way up here, it would have been very small compared to the rest of the size of the account. But let's take a look at now here's a strategy that over the course of 2 years, you almost tripled the size of your account. But look at all the losers in red on the left hand in this column B. And sometimes you have good streaks for winners, and then other times really streaks for losers too. You know, can you handle that sort of performance? I don't know why you couldn't, but you know, I mean, if you could perform like that, you would be a trading god. But the point is that people with the high probability trades, they are not getting anything like this kind of performance at all. And that's because their drawdowns are way bigger, and their max losses are way bigger. And normally they end up just tapping out. All right. What am I going to see when I go back to the charts? Is it going to be good or bad or any? Either. So there's still a chance that we come down. Ernie, the profit curve could increase even more if the risk tolerance were even higher, right? Say instead of 1 to 2 butterflies, you go to 4 to 5. You could, but you also increase your drawdown, and you have to put some sort of cutoff in there. And I would say that more often than not, you're going to risk hitting that cutoff early on. So yeah, you could. But I think that if you ran the simulator time after time, you would find that by increasing your position size, there's going to be a limit where you're going to find that there are diminishing returns. How you doing, Hassan? Never thought placing same trade on the call side as well as the put side. Yeah, of course we have. We call that the Batman trade. You'd end up spending around 110 US today if you placed both trade. Yeah, we do that. We've done that before, but it also reduces your risk to reward, and that's a metric that you don't want to sacrifice on. You want to be somewhere between 7 and 10, and that seems to be the sweet spot. And by putting on two trades, you're going to basically be cutting that risk to reward in half. Now you're talking about 1 to 5 or 1 to 4. And now you're starting to get into the same realm of, high probability traders. And it, it just doesn't work. It doesn't have a good long-term expectancy. So the answer is yes, we've experimented with them, we've tested them, we've done them. And in the final analysis, it's just not a good way to go. It just eats up too much commission and makes your risk to reward way smaller. Yeah, that's right. It really depends on your account size. If you have a bigger account, you can certainly go to much larger position sizes, and then you have the flexibility of different types of strategies, maybe scaling in, scaling out with those positions. You don't. Oh, let's say that your minimum position could afford to have 10 tranches. Well, you're not going to go with 10 tranches every time you go in. You might start every trade off with maybe 2 tranches or 3 tranches. And so let's say that you came close to profit and you're sitting there with, 5 tranches, half of your position size, and you've got, say, 200% profit. You might want to take, of those 5 positions, take 4 of them off and let the other one run. That one that could run might go and pin and actually make more money with that one trade than the others. But in the meantime, you have guaranteed a profit no matter what happens. So with a larger number of positions, if you have a larger account, you have much more flexibility in terms of your profit management. When you have a smaller account, not so much. And I would consider anything under 25,000 kind of a smaller account. So you have to be a lot more careful. It's when you start getting into the 75 to 150, 250 that you can start taking a little bit more, um, not chances, but be a little bit more sophisticated, I guess is the best way to put it. Yeah, this little bump down here, that was just a tease. And so that's you never know though. You know, in the past week, you have seen, if you've been following us, making almost a pin trade on the very last 30 seconds. It was crazy. The last 30 seconds, it starts out of the money and then bam, comes right in. What trade was that? That was, yeah, that was this trade right here. Made $314. It was going to zero. And then in the last 30 seconds, it came down and nailed it. So if we lose this trade, we'll be down $55. Right now, we're up 205. So we'll still be winners. Our win rate will be really low, but we'll still be up. But, you know, hey, look, I haven't given up yet. There's nothing to give up. Because we know that at any time that thing could come right down here and make us winners. Of course, if we come down anywhere in this area, we could probably get out of it with a profit. But it doesn't look like it wants to do that now. It looks like it came down here, settled here, did this little tease, came back up here, and it looks like it's going to settle right around here. That's my guess. All right, Vadim has more suggestions. Probably wondering if we ever did this, we ever did that. Did it ever make sense to go long a put or long a call with this strategy instead of a fly, given strong directional and magnitude of convictions? No, we don't. First of all, we don't have strong direction or magnitude of convictions. That's why we do the fly. We're sometimes looking not to profit inside the fly. A lot of times we profit outside the fly, and so we're really hoping that we could, you know, and the bread and butter trade really is sitting outside the fly, and then the profit curve moving into us as it rises, taking advantage of that premium decay, and returning a triple digit return, 100, 150%. That's the vast majority of our trades. That's not going to happen with a vertical. It would, or even just a long call or a long put. And plus, the risk is going to be too high. So we're not necessarily going for, you know, a strong directional move. Yes, we're going for a directional move, but we're not looking to go all the way in. About 10% of them will go all the way into the center strike. And that's what we're banking on, about that 10% figure. But we're not looking at it at every single trade. Most of our trades, like I said, are make profit on the fringes. And the only way to profit on those fringes is with that butterfly and that flat profit curve that rises into you. Hopefully that answers your question. It says also it was $50, right? We're not losing any more than that's correct. Let's see. I'll have to go back to the trade. Yes, it was 50. No, 55. Looks like I here, it's right here. It was a 55-cent debit. Yeah, so the most we'll lose is 55. I could get out right now and be down $12 if I felt like this trade isn't going to work out. I mean, really, I could get out with almost even. But I don't know. We've got 25 minutes to go. Anything can happen in 25 minutes. Ernie, to help highlight that point, it would be nice to note how many trades you allowed to expire or nearly expire. This lends to managing profit. Know when to close them. Well, first of all, there's no one strategy. There are a multitude of strategies based on a wide range of factors. It could be based on the market structure and where the trade is actually sitting at that time and what market structures are around you, how you make that decision. It also has something to do with the size of your account and the number of positions that you have, where you are in the strategy, what time of day it is. I mean, you know, the best way to answer that is that we encourage everybody to keep a detailed log of every trade. And over time, you're going to take that log and evaluate it on a periodic basis and then come up with strategies for these different types of situations and then hone in on what will give you the best results. That's about the best that I can say. All we know is that on average, about 10% of our wins end up being pins. 10-15%, depending. And then the rest, are some spectrum between 0 and that pin. And there are a multitude of different types of strategies that you can employ, again, depending upon account size, position, time of day, etc. Oh, well, that's one thing that I probably haven't emphasized enough, that, yeah, there's no real stress if it doesn't work out. No, and it's not like trading the other way. The other guys trade zero DTE, where if their strategy threatens one of the risk side, they are in deep doo doo, right? Because they are in trouble of potentially losing the last 10, 15 trades of profit, right? Because their risk is so high. With us, not even close. This style of trading is 30 times more efficient than the other guys that are doing zero DTE. 30 times. Yeah, the point we know when to close them was to highlight what you were saying about profit outside the tent, right? Thank you. Uh, Shreem wants to do a rain dance already. So we have this thing in the group where, we all get our rain dance going. And if you have rain sticks, you want to shake the hell out of them. And we cause that price to drop into our tent, into our profit tent. It helps. It's a strategy. Multiscan 8. Great name, I think. Since only 10% expire near the max profit, if I understood correctly, would it be feasible to figure the risk to reward on a lower, like 90% out of max reward? Um, would it be feasible to figure the risk to reward on a lower number, like 90% out of? Well, like I said, that is so multifaceted that there are many different situations, right? It could depend on the time of day. I mean, there are sometimes we take trades before the market even opens. With futures, you can take a trade as, sometimes we take it at 9, 10 o'clock at night and then close it in the early morning. Um, the price behavior between opening and noontime to close are different too. The number of contracts that you have will make a difference. Where price is at that particular time relative to the market structure can make a difference. So that's why I was saying that, yeah, there's no, see, you're looking for a formula. People are always looking for a formula, as if you can come up with some sort of statistical average and just follow the statistical average, and somehow you're going to get that meat trade just by following these sets of rules. It's bullshit. Every trade is different. I don't believe that this thing is going to turn around. I do not believe it's going to turn around. So I'm going to say we could cut our losses right here and, save half the money right now. What do you think? This does not look promising to me. Although, if I wait long enough, we can get a nice, if we get a nice move down in the next couple minutes, I'll hold. But if we don't, I'm taking it off. Or if we break through this line here, this is the edge of the value node. Oh, look at it. It's going to test it right now. If it goes through there, it's done. Then again, it could get pushed down right there. But look, when you see this kind of like curve up and then a wedge as it curves up, man, that is such an ominous. You look at it and you say, "Oh, I know it's going to go up, but I'm going to hold on just in case it comes down." Like now. Only if it gets up there. It hasn't gotten up there yet. It has to cross that yellow line. That's the outside of the T0 node into the well. The well is where there's a low liquidity, low volume. But it looks like it's getting rejected. Hassan says that 39.21 was his resistance. Well, I went a little higher than that. Well, I guess on the SPX, because we did take this trade in the SPX. What is the difference between the SPX and the E-mini? Right now we're at 39.22 and the SPX is at 39.19. So there's a 2-point difference, a little less than a 2-point difference. Okay, so we take long if it breaks it? No, no. I was saying that if it broke through, then I would have just quit the trade and recouped half of the risk. But now it's coming down. See, now we're even, right? If we just moved up another 5 points, we would be in profit. We could just take it off. See, right here, right there, outside of the profit tent is that's almost a double. Zaya G. I wonder what if we place 2 trades on both. We've had that question before. We get that question almost every day on both directions, up and down, with the same magnitude. One of them will lose, and the other will compensate for the losses and might be profitable overall. And the answer is no. All that does is reduce your risk to reward, and that is really what is the keystone to this strategy, the asymmetry. Right? A lot of this of what we do is all based on, in large part, the works that are done by Nassim Taleb in Fooled by Randomness and Skin in the Game and Black Swan, which are all treatises on asymmetry. Right? So that's what we're going after. We're going after the asymmetry because it has a positive expectancy as long as we keep the small risk, the big reward. If you go both sides, you basically cut that in half and you're going the other direction in the long run. So you're going after high probability, thinking that, oh, I'm going to get high probability and I'm going to make more. And the answer is no, you don't. The low probability trade with the higher potential profit makes way more than the high probability trade. If you take a trade on the ES at night, does it often have to be babysat? No, I go to sleep and I wake up the next morning and I see where it is. It's such a low risk that it doesn't bother me. All right. Let's hope, Hazan. Ernie, I was asking if it broke the yellow line in the middle of the well, would it be a long? No. I mean, when you say would it be a long, I'm not sure what you mean. Would it be a long? I would just get out of the trade. I'm not going to adjust the trade if that's what you're implying. So we are almost break even here. We just need it to come down a little bit. Doesn't have to come down very much. I mean, it looks like a lot, but it doesn't really have to come down that much. It's resisting. Oh, so if it broke the yellow line and went into the well, it would attempt to go to the next node, but it's not going to do it within this time frame. It will be entering a volume well where there's lower liquidity, and it can move a lot faster because there's nothing in its way, or no orders in its way, or fewer orders in its way. Hassan, I'm telling you, we've thought about this. I'm not going to fight the math. I'm not going to fight, brainiacs like Nassim Taleb that have spent a career around this and made fuck you money over this type of strategy because you have an idea that has been proven not to work. Sorry. There's nothing to think about. Absolutely nothing to think about. What you're saying is wrong. I'm just telling you, it's wrong. Outright wrong. So we're not going to do it. See, um, the biggest challenge that I have in this service is is when people like Hassan come into the service and then you have to reprogram them from high probability to low probability. They just don't get it. They do not understand. And no matter how much you try to drill it into their head, they will not get it. And then finally they get it. But it takes a while. It really does. It takes a while. See, we're profitable right now, but not by much. And see, I'm including the commissions here. So if I get out right now, we can actually get out with a little bit of money, just a few dollars. All right. So go do this. Go to Amazon and type in Taleb, Taleb, Incerto, Incerto, and you will get his 5 books. Well, 4 books mainly. That there's 5 actually, but the Incerto collection. There's the Black Swan. There's Anti-Fragile, Systems That Gain from Disorder. There's Fooled by Randomness. And then there is Skin in the Game. Those 4 books. Let's see. Can we watch this and in the market at the same time? Yes, we can. Ah, it's going the wrong way. Look at that. Ah. Sometimes when you see fast moves like that, that's like it winding up to go in the opposite direction. I'm starting to lose faith in this. We only have 10 minutes. Come on, buddy. Yeah. Imagine that, a 30% win rate and up. That is correct, Nassim Taleb. So I have a 44% win rate in the last month, and I'm up 2,200 bucks. And that's with 3 weeks of going sideways. Yeah, that's a very good deal for all 5 books. I like the Audible books because I have this adult ADD, and I can't actually sit down and just read a book. I would never get through it. So I need the Audibles. Yeah, this isn't working. Come on. Wrong direction. Oh, we've only got less than 8 minutes, and it's got to make a move here. But I'll tell you, we were right in the same position. And in the last 30 seconds, wham. I'm not saying it's going to happen this time. I'm just saying that it's not outside the realm of possibilities. Oh, that's awesome, Mario. As long as you keep those losers small, you can have a couple of big wins and they make it. The real test is over time. Yeah, look at that. See, wrong direction. You know what's the worst is that when you're in a trade like this and it's going in the opposite direction, and then you close and you're way out of the money, and then right after the close, the e-mini goes right back, right into the middle of your your profit tent. So you were right, but you were not right in time. Yes, Jago. That happens a lot. Look at this. I know that there are some orders right up here on this yellow line, and maybe we'll knock it down like it did over here, but we don't have time. We just don't have the time. It's got to knock it down hard. Now, it's gone. See, now that it's broken through the node here. It's now inside of the volume well. Um, yeah, that's like the death knell to this trade. That's what happened yesterday. So, so now we're 2 out of 6. So we're only 33%, but we're still up over $100. Look at that. I'm still going to watch it because you never know. After that other trade that we had, I'll watch it right to the very end. There's nothing getting me off of this trade. Unless it just like impulsively moves up right now, then it's, already I'm saying that the chances of it coming back are slim to none. But it can happen. Less than 4 minutes to go. Come on, let's do it. Let's see some real bleeding. Just like the other day. Come on, you can do it. This is about how far out it was, too. And it was in the last 30 seconds. I don't want to get you all, hopeful and everything, but it was just fun to watch. There's less than 2 minutes. That is correct. No profit if it expires outside of the tent. At this point, it has to get inside the tent in order for us to profit because the profit curve is just, it is really see how it's hugging? Is We would have to get inside the tent. And with less than a minute to go, fat chance. It's not making the move. It's all right. We come back at it tomorrow. And then the next day and the next day. And then the next day. See, it's gonna do an upward move. See how the volume coming in right at the end? Oh well. On to the next one. So a great thing about this trade too is besides the fact that you can stay relatively calm because you're not putting a huge amount at risk. Um, where was I going with that thought? I mean, that is the great thing that you don't have to be sitting there sweating bullets. But the key here, the absolute key, is that you have to trade small. And a lot of people haven't gotten that yet. So even with a very large account, I mean, with a $200,000 account like I have, I don't trade very big. I trade like 0.5%, and that's it. And that is so important. Trade small. Trade small and try to get that big risk to reward. So, well, that's about that. That's about that. Hey, if you'd like to try out the service, go to 0-dte.com/try and get a 4-week trial. And in the trial, you're going to learn all about our system. And that's more than this is not really an alert service. Here, you're going to learn how to become a professional trader, all wrapped around this fantastic way of trading with asymmetry, low profit, low potential risk, low risk, and huge potential profit. So there's going to be a 4-week trial. You'll learn all about our system, our process, which is a continuous improvement process. You'll learn about our strategies, our methods, our analytical methods, and it's really a great deal. There's a great trade room in there. There's 650 other traders, some with big accounts, some with small accounts, some with decades and decades of experience, and a lot of people with very little experience. So it's a good mix, and it's a great bunch of people. All right. So thank you very much. And now it's time to say goodbye. Peace to you all.